The previous lecturer discussed about the operation and capital expenditure budget. The first part of the budget, which is the operating expenditure budget, shows the estimated revenues and operating expense for a given year, while the second budget, which is the capital expenditure budget, shows the expected acquisition and disposals for the coming year. Hi, my name is Jovelyn S. Salonga, and I will discuss about the projected financial condition. So, at the end of the discussion, the students are expected to learn the projected financial condition, to know the difference between the financial statement and projected financial statements, and lastly, to know the use of projected financial statements. So, projected financial statements, these are the detailed description of a company's operations and prospects for the upcoming year. So, it includes projected financial position, projected income statement, projected cash flow, and lastly, the projected statement of earnings and owner's equity. So these statements are important tools in order to determine the overall performance of the entity. It will also show the outlook or the perspective of the entity for the next 5 years, supposing the plan has fully implemented. So let us not be confused between financial statement and projected financial statements. Financial statements shows the formal record of the current and past data of the entity, while the projected financial statements, this only shows the current and for the upcoming year of the entity. So now, let's move on with the projected financial position, which is a statement that is prepared to know the value of the assets and liabilities in end of a period. The asset section should be presented in order of liquidity, starting with the most liquid assets, and then the liability section should also be presented in order of maturity, starting with the liabilities. So this is my sample of the projected financial position of the Ohana Trading Corporation. So in here, we can see that this is their current year, which is the 2018, and then 2019 to 2022, which is their prediction of the upcoming years. Now, let's move on to projected statement of income and expenses, which is a statement that is prepared to know the profit or loss of the entity. It also captures profit performance, demonstrates immediate capability to service debt for banks or real potential for growth in returns for venture capital. So here is my sample of the projected statement of income and expenses. As you can see here, this is their current year, and the 4 succeeding years are their projected statement. Projected cash flow statement. It is a key aspect of a financial management of an entity, planning its future cash requirements to avoid crisis of liquidity. This is also the most critical forecast since it reflects viability rather than profitability. Therefore, monthly cash flow is a key statement since it enables calculation of coverage at any given point. Again, here is my sample of the projected cash flow of the Ohana Trading Corporation. So lastly, projected statement of earnings and owner's equity. So according to Dr. Casurao, the statement of owner's equity portrays changes in the capital balance of a business over a reporting period. So this is my sample of the projected statement of earnings and owner's equity of the Ohana Trading Corporation. In a nutshell, preparing projected financial statements can be very time-consuming, and it requires a careful analysis of the company's past and present financial health. Projected financial statements project or forecast a company's performance in the near future. Also, projected financial statements is an important part of the financial planning to predict the outcome of an entity's results in their future periods. It can also be a guide to help the entity grow without using or running out of their cash. So by studying the past performance of the entity, the analyst will be able to predict the company's future condition. And here is the list of my references. So that ends my report. Thank you.